The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys are having a good morning here. We're going to have Joey on just a little bit. We're going to grab him from over in Hong Kong and screw up his night. 12-hour difference now since we had a change in the daylight savings, so it's better for everybody. Wake up in the dark. Anyway, let's take a look at the U.S. dollar here. Talked yesterday. Getting right into it here. We're gonna have Yellen speak today at what, 11:30? Is that the deal? 11:30, and we've got consumer confidence at 10 o'clock. So those are the times. 12:20. Those are the times to be aware of when it comes to looking at the dollar, the notes, the golds, the S&Ps of the world, all the things that are going to be reactionary. As we look at, I thought it was 11:30. Tom's saying 12:20. Thought I said, thought it was 11:30. Anyway, we'll confirm that at the break. Looking at the dollar, just getting right into one of the things that'll be, somewhat volatile based on her either correcting herself or fighting some of the folks on her team. 96.23. We talked about that level yesterday, trying to put some stops in and trying to lean against that for the dollar to slough off a little bit more. And again, you've got a tug of war between her and some of her cohorts there, so she'll possibly clarify that, but I doubt it. That will be something always mysterious, as usual. So be prepared for some volatility there. And how do you play this? In my opinion, you've always got to kind of be on the sidelines until some of these things come out, some of the rhetoric comes out, and then trade the reaction, not the initial action. So again, that'll probably hold true for the dollar. And the rest of the team here, as we go into the S&Ps, we take a look at this. We talked about 21, 25 being the number yesterday on the bottom, and that was something we could count on as we reached a low yesterday of 2022. So again, we're kind of leaning, kind of pressuring, consolidating around this 2021 this morning. Don't need to get too excited if you're long about that, as if it's basing to ricochet again. I think there's going to be some uncertainty based on some of the things that she says, and the market doesn't like uncertainty. And we've also talked about this 46, 47 area. We've already kind of not exactly reached that neighborhood yet this week, but again, those are the big numbers. Breakouts on one side or the other of that of that particular range is going to be something hopefully you can trade on a breakout fashion. I'm not playing around with this right now until after she speaks and all the news is out. The numbers that are coming out economically too, pretty slowish down numbers coming out from some of the economic figures that are out in the open now. Whether they're true or not, we don't know, but that's what they are. We're going to take a look immediately at what's going on in Shanghai. I don't think this is going to have a huge bearing on what's going on, but we talked about, again, this is our weekly on the Shanghai. We talked about it getting into those targets and then just kind of settling back into the range. We reached a high 30.56, top of the profile. We reached a high of 30.28, so got pretty close in that neighborhood at least, and now we're just starting to break down again on the daily. But remember that there's a weekly range here, bottom of the range 27.42. I don't think the United States is paying too much attention to that. We're going to take a look also at the Nikkei really quick, just to kind of cover what's going on in Asia. yeah, I just think, everybody's kind of waiting to see what happens with some of her comments. So not a lot of reaction globally. Nikkei up, Shanghai down, dollar down a little bit. Looking at the notes, talked about this yesterday. It was really kind of non-directional, and looking at our weekly, talked about putting a gun to my head. We were probably just going to lift a little bit, but again, I don't have a lot of confidence in this trade right now. 129.02. We kind of closed back above in the balanced area, went back and retested a little bit too much for my taste, but closed above that weekly unfair low, and now I've kind of moved above it. So again, talked about stops below 129 on this if you're going to trade it from the long side. The POC is kind of in the way here, 129, 24, 25. But again, I think you just got to sit tight, unfortunately. Maybe go fishing this morning if you got a creek or a pond near you. Just relax. Anyway, or if you're in Clearwater, you can just kind of, go west a little bit. And anyway, let's take a look at gold. The big deal with gold right now is the 1203 area. And yesterday, I'm going to just put this out here. The low was 1206. We got into the neighborhood of that 1203. Why is 1203 important? That's the POC on the wide profile when it comes to gold. And that particular number, 1203, can act as support right now. That's the top of the mountain, remember. And I like how it's basically gotten away from that area. Again, you want to wait for the market to come to you a lot of times with these profiles, and that 1203 got a pretty big upside inflection point at 1244.5. So again, if we talked yesterday, if you hadn't caught gold already on the long side by getting into that neighborhood at 1203, I think it's just kind of a wait and see. You kind of miss that if you didn't have any buy orders around that general area before that happened yesterday. So right now, I think it's kind of just a no man's land type trade. I don't feel good about going long or short until we get near those inflection points. Crude oil, we talked about this kind of not being something that we're going to look at heavily from the long side. I talked about it possibly just churning around. 39.29 bottom of the profile, 42.53 top of the profile on the weekly. Now we're starting to get below 39.29. Not a lot of big fundamental news out there that would cause gold to do anything other than just churn around at best and maybe just kind of continue to slide a little bit. Joey's going to talk about that a little bit more probably when he comes on the show after the first break. But not a lot of reasons to get long gold in a big way at all right now. I think it's just sit on the sidelines trade. We met our targets at 42.5, and that was a great trade. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Joey, are you with us?
Yeah, I'm on. Hey, John, how are you?
Hey, how was Hong Kong tonight?
Good. It's nice weather.
Good. It's kind of nice here too, which is cool. Hey, listen, what's on your mind? Are you? I talked about gold a little bit. What would you like to talk about today?
Nothing specific. Everything's kind of in a holding pattern.
Okay.
We've had such a great move in all the commodity space and the Asian currencies, especially the Aussie dollar. So, we've had a very good move in those. We're kind of just in a holding pattern, resting for a little bit. A lot of those seem like it's broken out of the long-term, few years of downtrend. The commodity space has been under, years of pressure, basically. And now I think some of these are trying to break out of that long-term downtrend, and we've had such a great move in the first couple of months that we need to pull back here. So that's what we're doing.
Okay. I got a question in the den. I'm just going to answer it really quick. The question is, for guys out there who are not in the den, it says, can you explain why the Stoudemire algorithm has not calculated a new weekly crude oil profile despite significant movement in crude oil the past 3 months? Well, actually, this is not a Stoudemire profile algorithm. It's our algorithm. That's the first thing I want to say. It's kind of based around the original concept that he developed, which is a manual process and was originally developed for floor traders and using the data on the floor for within 30-minute blocks of what's going on in the pits. So what we've done is basically made it dynamic, automatically outputting, and it's based on some things that we put together that when we feel a new profile is appropriate to be outputted, then that happens, and it happens in a tall way, a wide way, however you want to look at it, and stays in force as long as the algorithm is saying, hey, you know what, we're going to stick with this profile. This is appropriate. So this, and the question, Joey, is the profile on crude oil has kind of hung in there for a long time on a relative scale since the end of December and first of the year. So
well, the profile before that was held for
pretty,
you know 5 months, 4 or 5 months. So this one is getting old.
right.
But, not quite, it's getting. I think a new one's got to appear in the next few weeks, but
Right.
but this one has been terrific because remember when it was around 41, 50, 42 level, both of us had said that this is getting really tired and it needs to pull back.
Yeah.
And it's pulled back now. So
We reached a high of
gold
42,
yeah, gold
40.
did the same thing.
Exactly.
It got to a level where it didn't quite reach 1350 or 1330 like I thought, but it got it got tired and all the technical started kind of diverging, and so we said that was going to pull back as well.
Right. So about a week and a half ago, I guess we reached a high on this May contract of 42.49, and that profile high was 42.53. So we're like 4 cents off of where the targets, I guess, were on the maximum amount of movement on the north side that crude would have taken relative to this profile. And
Yeah,
I
mean this specific profile was set in the second week or in the third week of December, so we
Right.
knew that it was gonna try to test this upper end of the profile at some point, and it finally did it, a few months later, but
Right.
but it finally got there, and it was a very strong resistance at that point.
Good. Okay, so Steve asked, is show a new weekly trying to form now? New weekly. I don't have that. This is our weekly right now. There's no new profile attempting to appear. Steve Rhodes. So I'm looking at crude right now on the May contract, so I don't see anything attempting to appear here. Let me check our scanner.
Yeah, but I mean, for crude, I'm just looking at the daily, and there's a lot of very, very strong support around the 37.50 to 38.50 level. There's some really good support. So I really, given how much positive technical work we've done, I don't really think that we're gonna dip too much below that. I think we're gonna try to retest that 37.50 to 38 level, and then bounce from there.
Right, I'm showing in the scanner right now. Steve's right. We do have a new profile attempting to appear. It's not yet showing up on the chart here. And the reason for that, Steve, and this is a great question. Let me see if I can get this chart out of my way. That's a great question, Steve Rhodes, and I'm glad you brought it up. A lot of times these e-signal weeklies and dailies don't exactly show pre-market. So the scanner is incorporating all that. So that's actually, I didn't realize that. That's the scanner's right. So as I'm looking at the e-signal charts, it's not reflecting that. So we do have something going on there. And that's something to be aware of. And that's my mistake for not actually bringing up the scanner first. And again, sometimes the weekly and daily prints on these e-signal charts aren't exactly showing all the information. Okay, so Joey, we're going to go to break in about a minute here. Is there anything that, I know there's kind of a disconnect in what's going on in China now and what's going on in the U.S. markets. Do you feel that that's still the case? It really doesn't matter what's going on over there right now relative to U.S. markets? Yeah,
I mean the U.S. is in a much better economic condition, so the market is acting a lot better. The Chinese basically flooded the system with new loans. It basically rolled over everybody's loans. It basically asked the banks to roll over everybody's loans, even though most of them on any kind of economic calculation should have been foreclosed and written off. But
Right.
as long as you don't write them off, I guess they're still good loans. So
When you say ask the banks, what does that actually mean? Does that mean that they tell the banks, or to say, hey, look, we're giving you more less margin requirements, or like what? How do they even do that?
They basically a lot. Well, most of the banks are they're called policy banks, which means that the button is still being pushed by upstairs.
Cool. Hey, look, we're gonna get a break. Can you hang out?
Yeah.
Great. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And I think we still have Joey Jung from Hong Kong on with us. Joey, you there?
Hey, John. Yeah.
Great.
I'm here.
Hey, listen, I got a question that I think everybody might be able to, glean some information on after you answer it. You've been on quite a few large desks, the Deutsche Banks of the world, the HSBCs of the world, and managing those desks. On a day like today, when you've got Yellen coming on and making some comments and things like that, what do you generally, because I think the traders out there that are listening to this might benefit from, what do institutional guys do on days like today? And are you focusing on just them individual stocks, or are you just kind of sitting on your hands, or what are you, because it's kind of hard to peg what's going to happen with some of these, the golds, the dollars, the notes of the world. What would be some advice?
I mean, on a day like today, I mean, I mean, there's not that much that is expected to come out of this. Like this one isn't a big one of those big decision meetings from the ECB or
Right.
from the Fed. So there's not that much bets being put around this particular meeting or anything like that. So and a lot of the gold and oils and they've all pulled back. So we're all in a consolidation phase. So there's not that much pressure on this one in particular. And there are certain other. Hold on one second.
Okay.
There are certain other meetings where you have commodities or currencies running up into a meeting and expecting a lot of things to happen, and those are the types where you kind of put on short-term bets against it, because it's always buying rumors, selling facts. So but this particular one doesn't, we're not, there's not too many bets put against it, so it's not that much pressure on this particular one. So I wouldn't be doing, I'm kind of just sitting and watching. I think gold bounced off at 1206 yesterday.
Yeah.
Yeah, very strongly. I think 1200 is still very strong support for gold, and about 3750 for oil. We're getting near that support level, and we're going to test that for a while. So I think it's just a bit of range trading for the commodities, and even for the dollar, we're kind of stuck on the lower end of the dollar DXY trading range as well. So everything's kind of range bound right now, and we can talk about equities and the S&P in a little bit as well.
Sure. Sure. I just want to point out to everybody, we talked about this Canadian dollar coming off those unfair lows on the daily, I believe. Let's just pull up a chart here. So we came off of this 132.94 yesterday. We talked about that being a little bit of an area you could place stops above. The Canadian dollar is showing red across the board here on the scanner. Going into our weekly, again, we've got that new profile attempting to appear, hasn't locked in, might not lock in, but just a kind of a hint of something there. So again, that's a little bit of a tug of war when it comes to new demand area down below possibly happening, but yet coming off of those daily unfair lows. Now this is a trading opportunity. I think crude oil, as we talked about yesterday, and Joey, what you've kind of talked about already today, has is kind of range bound at best. I think the upside on crude oil, as well as Joey's probably already said that, we've kind of reached our targets. Now it's just going to be kind of chop city for the while, I think, at best, Joey. Is that? Yeah. And then
Yeah,
therefore these currencies. Go ahead.
Yeah. The only thing is, the longer term, I'm hoping that gold and oil have broken out of their long-term downtrend, weekly downtrends. They haven't broken above, or oil hasn't broken above the weekly profiles yet. And that's what we need to still do before any significant breakout. But I'm just on some other indicators. We've actually seen some type of at least a halt of the weekly downtrend.
Yeah. Exactly.
So on a longer term basis, I'm hoping that this pullback is actually a pullback within, a move higher, rather than for the last few years, which is just one straight arrow down.
All right. I'll tell you what. On the euro, I know we've kind of kind of broken out above this 110.43 area, and then we kind of reached those targets, the previous profile high, 113.52. What are you thinking about the euro here? Because by default kind of general concept, we're trading above weekly profiles here, and that's kind of okay to be long, not okay to be short on the long term, but we're in the middle of a pretty wide profile in the daily. Do you have any thoughts on the euro here at all?
I tell you, the dollar index is stuck right in the trading range right now, okay. And if you look at the MACD, you look at a lot of the different indicators, the technical indicators, and they're all showing you that it's basically just range bound with no trend.
Okay.
And and there's really there's nothing happening in terms of in Europe. With Brexit, there's less talk about Brexit. There's less talk about any other problems there.
What happened with Brexit? It's almost like that fell off a cliff. That's coming up in June, right?
Yeah, that's that's going to become a topic once again, and I think that's. But right now we're kind of in that pause trading range area. So let's wait for another few months before that comes back into topic again. But until then, I think for the next couple of months, we're kind of stuck in this trading range.
Absolutely. I feel the same way. I've got a little bit more.
And I mean, even equities, I think there's so much skepticism about equities. And, I'm even skeptical about equities. I don't think it should go higher, but everybody is skeptical about it. So therefore, it kind of just crawls the wall of worry. And I don't think we go much higher than basically, 2100 level, just because people are still long. They never really sold, but they're skeptical about buying more.
Right.
So
really, I mean, it doesn't feel like the right environment to just pile into equities for sure.
No, it doesn't. I think the upside is limited. The downside is more, but nobody really wants to pull the trigger either. So, again, even in equities, we're kind of stuck in this trading range as well.
Well, hey, if you got time, it'd be awesome if you could continue, but I understand it's late there. You make the call.
Okay.
Okay, man. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. And it was a pleasure, as usual, to have Joey Jung from Hong Kong on. And, you know, it's so good to get another perspective, especially from somebody who's just seriously been around the institutional world. You know, I met Joey through Bloomberg, and we became really good friends. And he's a great guy and has some great information. And it's always good to talk to him about what he feels is going on. He's a very good intuition type trader also. And, you know, he's obviously been around the block, so it's good to get a perspective from him. And he's going to be on with us more and more as we move forward. As we look at some of these, you know, we talked before the show, Joey and I, and it's just kind of it seems like the commodity move has happened. There's not a lot of people interested in equities or just piling into a major move in equities. There's obviously plays in equities, and that's what I think now we can look at relative to technicals on individual instruments. You know, when you're sitting in front of the screen, I've said it a zillion times, it's kind of hard to not push buttons. I'm a victim of that sometimes. So sitting on your hands sometimes is a really good idea, but when it comes to finding opportunities and looking at technicals on individual stocks, I still, you know, think there's some great opportunities, even though, like we talked about before, it's not possibly a good idea right now to pile into MOs of markets going straight up or markets pulling back significantly. So that being said, drilling into the scanner, this is one thing I do all the time. You know, I mean, I look at some of the individual instruments relative to some of the just manual filters. We've had a big move up. I've talked about that a lot, and we, you know, kind of want to see what's been kind of clarified as far as, you know, what really hasn't participated possibly, and what's just kind of rallied up into some inflection points that we can pay attention to. And again, the numbers mean something on the scanner. That's how many bars, how many weeks in this case. I'm looking at the weekly standpoint. I can sort these things just when I'm looking at you know, broad swaths of stocks. I mean, there's 500 stocks in the S&P 500. I'll go in here and just kind of sort them, and that'll put some numbers in a correct scheme for me, ranking them high to low. So what does that tell me? In the gray cells right now, that tells me that, for instance, I'm going to go down to the very bottom. For 85 straight weeks in an uptrend, Hormel Foods, even though it's within a balanced area, that arrow up, it's been an uptrend for 85 straight weeks. So I want to go in here and I want to pick out Hormel Foods. And as you can see, just looking at the chart, this is extremely cool to me to be able to have this information. And I'm not just saying that from a sales standpoint. It's nice to be able to find, you know, what's the strong of the strong and what's just kind of hanging out in the balanced area but still on its way up. very cool to be able to find these things, in my opinion. So you've got that ability. You've also got the ability as you sort these, and these are all the stocks in the S&P 500. This is probably the longest trend up Hormel Foods that we can find defined by profiles. So looking at the other side here, we've got a lot of stocks that are sitting at the top of the weekly profiles and showing green. And some of these with the ones here, ADT Corp, I'm going to pull this up. This is a news story, so I kind of want to stay away from that one. Signet Jewelers. Let's take a look at this one. And I'm just pulling up our snap chart here. And again, just starting to poke its head above, not clarifying completely away from the noise area. And when we have top here and bottom, that means that we're still within the noise area. And I don't talk about definitions of the scanner enough probably, but a lot of our algorithms, especially the ones on an automated side, they kind of want to be clean and clear of these noise areas. So what is a noise area? What's the definition of a noise area? It's 10% of the height of the box. And we kind of use that as a buffer zone on the top and the bottom of these profiles. So for instance, ADT Corp is still within that noise area and not really. And Joey had talked about kind of buying gold the other day in the noise area, not to miss the trade as it was pulling back the other day. I don't know if you guys caught that show, but as opposed to Marriott International on the weekly, this has clean and cleared the noise area on the breakout of the latest weekly profile. It's a very new profile. It's a very not wide profile. What am I saying? Thin profile. What's the opposite of not wide? Thin. So that's something that is saying, hey, you know what? I'm past the noise area. And again, the stocks on a pre-market in the morning manner are a lot of times they're not going. We're showing real-time data here as soon as the stock starts printing. But remember that until the stock starts printing, these are not going to. The stock needs to print to really cause this to be extremely valid relative to what happened on yesterday's close on the stocks. Remember, these things don't trade 24 hours a day. So Time Warner, similar situation. Again, broke out 2 weeks ago, now breaking out again. This is in the sector, and you can see it really, really quick. It's in the XLY. All right, so this discretionary here. So when I go into the XLY, I can kind of look at the XLY. I can pull this up in the scanner too. I can see how it's doing on a long-term basis. It's broke out and came back and retested the 7509. This is our weekly, and we've got a daily profile here. We're just kind of spinning around, and it's very similar to the S&Ps, almost mimicking the move up in the S&Ps. And looking at Time Warner, seemingly that is a stronger stock of the XLY. So just kind of point out some things you can notice in the scanner really quick. And again, I'm going to resort this. I'm going to go back to my dashboard here. All right. So if I want to do some sorts here, if I want to see what's has completely not been cooperating or even getting above weekly profiles, and something that the market does turn south. And again, I think we're just going to churn around sideways here, but some of these stocks that haven't participated on the upside, some of these ones that have rallied back up into unfair lows, just look at Eli Lilly, LLY. And again, 58 straight days down arrow in the balanced area on the daily. So let's pull up LLY really quick. As we pull this up, again, actually, I think we talked about this yesterday. 71.93, stops above 72. The stock looks wacky, to say the least. And as we look at the healthcare sector, I think we've got some downside still left on that. So again, you want to be selling the weak of a sector that you're looking for some kind of pullbacks on. Okay. We're going to take a look at a couple other candidates on the short list here when we come back from break, guys. And we will be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We're talking about some just basics of the scanner. We were looking at seeing what hadn't been cooperating and what was maybe hitting some inflection points with the numbers there. ESRX, we're going to take a look at that. Kroger, yeah, still the ugly situation. Lilly, we just talked about that. I think that's a decent situation. Symantec Corp, we're going to take a look at that. We're going to see what that looks like. But we talked about the little stock called ENDP the other day. This was actually when I was in Clearwater at TFNN. We talked about just keeping it on your radar screen. Just look ugly. Weren't any inflection points to really pay attention to yet. And this was, I think we were looking at this back in that area maybe, right? And whatever that was, 21st, Monday or Tuesday last week, or maybe even Thursday. I can't remember. But anyway, we didn't have any profiles to lean on, and that's kind of scary when you've got something that far in the hole and no inflection points. So now, believe it or not, even though the stock's lower, I think from where we were talking about, we've got 28.96. It's sitting there, and now we're below inflection points. And let's see. I know this thing's come a long way, come down a long way. This morning, no prints this morning. It doesn't look like it. But again, you got something to orient stops around. And that's kind of, the theme of what I'm saying is when I look at these candidates, the first thing I think about is where can I put my stop? And if there's no defined stop area or nothing to lean on, it ain't happening. I mean, I don't know how else to say that, but things that are in the hole or things that are away from profiles significantly, they can bounce around in these holes. So now we've got a profile. Now I feel comfortable that I can at least orient a stop on something like this. And where's the upside? I think the upside or the downside, the downside is. And there's your 240s. You obviously had a little bit to lean on yesterday, but again, I like those daily profiles to kind of put some stakes in the ground. You would let the 240s kind of regulate that trade down even farther. And I know we've come down a lot on this particular stock. You may want to do some fundamental research to see what you're getting into. But a lot of times, things when the lows go lower, and people just try to pick these bottoms, and then they have to cover, and then it goes lower. So remember, it's not on sale. It's down for a reason. It is what it is. ESRX. Let's take a look at that one. All right. So another. Let's go back to the scanner really quick. Another XLV stock, healthcare stock. Here's the situation on the weekly. Not wanting to get off the lows. I think, you probably have better candidates out there in this one. I don't like how it's kind of consolidating around that area. But, again, something to put on the radar screen. We've got unfair lows on the weekly and the daily is kind of a similar area. Got a little DMZ between 67.05 and 67.78. I'm going to go into the scanner, and I'm going to show you that there we are. There's a 67.78. There's a 67.05. And here's where the level of the market is. So, again, I'm looking at it strictly because it had bottom there. We were near an inflection point. I'm going to look at Symantec really quick. SYMC. This is on the scanner. This might be interesting. SYMC. I like this. 1863 stops above. And where's the targets down below? 1748. Why? That's the top of our profile on our daily. Guys, you've been great. Stay tuned for Larry, all the hosts on TFNN. We'll pick it up tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.